If you're trying to figure out how to invest in gold, silver, or copper as a European investor, and you're confused about whether you should buy the actual metals, ETFs, or something else entirely, this video is for you. I'm Marcus, I'm 29, I'm a software engineer in Stockholm, and I stick to boring index investing with UCITS ETFs for 95% of my portfolio. But this month, with gold, silver, and copper all hitting record highs at the same time, I've been getting a ton of questions about commodities. In this video, I'm going to show you exactly how Europeans can invest in these metals, the difference between ETCs and mining ETFs, and honestly, whether I think it makes sense to add them to your portfolio right now. Let's jump right in. So first, let's talk about what's actually happening with these metals. As of mid-January 2026, gold is trading around $4,600 per ounce. Silver is near $90 per ounce, and copper just hit over $6 per pound. All three of these metals hit all-time highs in the past few weeks. For some context, gold was at about $2,600 per ounce at the end of 2024. So it's up about 66% in 2025 alone. Silver surged even more, up 142% last year. Copper was up 41%. These are massive moves for commodities. Now, why is this happening? There are a few reasons. Gold and silver are reacting to geopolitical tensions, uncertainty about the US Federal Reserve's independence, and basically people looking for safe havens when everything else feels uncertain. Copper is a bit different because it's an industrial metal. It's getting a boost from AI infrastructure demand, the electric vehicle boom, renewable energy build-out, and concerns about potential tariffs disrupting supply chains. China has also been buying metals aggressively, which is pushing prices higher across the board. Here's the thing though, just because something hit an all-time high doesn't automatically make it a good investment right now. In fact, buying at the peak is how a lot of people lose money, but I'm getting ahead of myself. Let's first talk about how you actually invest in these metals as a European investor, because it's not as straightforward as you might think. So here's where it gets interesting, and this is something that confuses a lot of people. In Europe, you cannot invest in gold, silver, or copper through UCITS ETFs. I know that sounds weird, but it's true. The reason is because of EU regulations. UCITS stands for Undertakings for Collective Investment in Transferable Securities, which is basically a fancy way of saying EU-regulated investment funds. Under UCITS rules, an ETF has to be diversified. No single holding can make up more than 20% of the fund. So you can't have a UCITS ETF that's just gold, or just silver, or just copper, because that would be 100% one thing. Instead, if you want direct exposure to the metal itself, you need to use something called an ETC, which stands for Exchange Traded Commodity. Now, ETCs and ETFs sound similar, and they trade on stock exchanges just like ETFs, but they're legally different. An ETC is not a fund, it's more like a debt security that tracks the price of a commodity. Some ETCs are physically backed, meaning there's actual gold or silver sitting in a vault somewhere that backs your investment. Other ETCs use futures contracts to track the price. Let me give you some actual examples. If you want to invest in gold, you could buy something like the Royal Mint Responsibly Sourced Physical Gold ETC, which trades on the London Stock Exchange. There are also UR hedged versions if you want to avoid currency risk. For silver, there are similar physically backed ETCs. For copper, most ETCs use futures contracts rather than holding physical copper, because storing tons of copper is way more complicated than storing gold bars. Now, here's the alternative. Instead of buying the metal itself through an ETC, you can buy shares in companies that mine these metals. And for that, there are UCITS ETFs available. For example, Global X has a Copper Miners UCITS ETF, ticker COPX, that invests in companies that mine copper. There's also a Silver Miners UCITF and various gold mining ETFs. These funds hold stocks of mining companies, not the actual metal. So which one should you choose? Well, they behave very differently. If you buy a gold ETC, you get basically 1-to-1 exposure to the gold price. If gold goes up 10%, your investment goes up roughly 10% minus fees. But if you buy a gold mining ETF, you're investing in companies. These companies have operating costs, management decisions, debt, expansion plans, all that stuff. Mining stocks tend to be more volatile than the metals themselves. When gold prices go up, mining companies can see their profits surge because their costs stay relatively the same, but their revenue goes up. That means mining stocks often move more dramatically than the metal price, both up and down. Let me be clear about my own situation. I don't currently own any gold, silver, or copper in my portfolio. My investment portfolio is about 55,000 euros total across all my accounts. And it's 70% global UCITS ETFs, 20% emerging markets, and 10% European small caps, all boring index funds. I have a tiny amount of Bitcoin that I bought years ago, about 2,300 euros worth, which I consider more of a speculation than a real investment. But actual commodities like gold or silver, I don't own them. And here's why. My investment strategy is simple. I'm trying to build wealth over the next 10, 20, 30 years by buying and holding diversified stock index funds. Stocks represent ownership in businesses that produce goods and services, hire people, generate revenue, and hopefully grow over time. Gold and silver don't do any of that. They just sit there. They don't pay dividends. They don't generate earnings. Their value is based entirely on what someone else is willing to pay for them in the future. That's fine as a store of value or a hedge against inflation or economic uncertainty, but it's not how I want to build long-term wealth. That being said, I'm not saying commodities are bad or that you shouldn't own them. A lot of smart investors allocate maybe 5 to 10% of their portfolio to commodities, including gold and silver, as a diversification strategy and a hedge against market volatility. If the stock market crashes, gold often goes up because people flee to safety. So it can reduce your overall portfolio risk. I get that argument, I just personally haven't felt the need to do it yet. But let's say you do want to invest in these metals. What should you consider? First, timing. Right now, all three of these metals are at or near all-time highs. That doesn't mean they can't go higher. Analysts at Bank of America are predicting gold could hit $5,000 per ounce this year. Some people think silver could reach over $100. Copper could keep climbing if tariffs disrupt supply. But it also means you're buying at elevated prices. If you buy gold at $4,600 and it drops back to $4,000, you're down 13%. Volatility goes both ways. Second, think about why you want to own it. Are you buying it as insurance, like a hedge against economic chaos? Then maybe a small allocation makes sense and you hold it long term, regardless of price swings. Are you trying to speculate on short-term price movements? Then be honest with yourself that you're taking on more risk and you need an exit strategy. Don't just buy because you see headlines about record highs and you don't want to miss out. That's FOMO, and FOMO is not an investment strategy. Third, understand the costs. ETCs have expense ratios, usually around 0.3 to 0.6% per year. That might not sound like much, but over decades, it adds up. Mining ETFs also have fees. Plus, the companies inside the ETFs have their own costs. And if you're buying physically backed gold or silver ETCs, you're essentially paying someone to store metal in a vault for you. Fourth, taxes. In Sweden, where I live, gains on ETCs are taxed the same as stocks, which is capital gains tax. But tax treatment can vary across Europe, so check your local rules. Some countries treat physical gold and silver differently than paper gold and silver. Now, if I were going to add commodities to my portfolio, here's probably what I would do. I'd allocate maybe 5% of my investment portfolio to a physically backed gold ETC, just as a long-term hedge. That would be about 2,750 euros for me. I'd probably skip silver and copper for now because I don't want to overcomplicate things. And gold is the most established safe haven asset. I would not try to time the market. I just buy it, hold it, and rebalance once a year if it grows beyond 5% of my portfolio or shrinks below it. And I would absolutely not touch mining stocks because they're too volatile for my taste, and I don't have the time or expertise to evaluate individual mining companies. But here's the honest truth. Even as I'm explaining all this, I'm probably not going to do it anytime soon. Why? Because I'm focused on hitting 100,000 euros in net worth, which is my big milestone. I'm at about 55,000 euros right now, so I'm just past halfway. My strategy is working. I'm investing 1,300 to 1,400 euros per month into my UCITS ETFs through Avanza, which is my Swedish broker. The market was up about 15% in 2025, so my portfolio grew nicely. Adding commodities would be another layer of complexity, another thing to track, another decision to make. And for what? Maybe a tiny bit of extra diversification? I'm just not convinced it's worth it for me personally at this stage. If you're just starting out with investing, if you don't even have a solid emergency fund yet, if you're not maxing out your tax-advantaged accounts, then honestly, commodities should not even be on your radar. Get the basics right first. Build that foundation. Once you have a solid portfolio of diversified stock index funds and you've been investing consistently for a few years, then maybe consider adding a small allocation to gold or other commodities if it fits your strategy. At the end of the day, this is just what I think based on my own research and my own goals. I'm not a financial advisor. Do your own research. If you feel strongly that gold, silver, or copper should be part of your portfolio, then go for it. Just make sure you understand what you're buying, why you're buying it, and that you're not just chasing price movements because you saw some exciting headlines. So to recap, Europeans can't use UCITS ETFs for direct commodity exposure. You need to use ETCs or mining company ETFs instead. Gold, silver, and copper are all at record highs right now, which means higher risk if you're buying at the peak. Commodities can be a useful hedge and diversification tool, but they don't generate cash flow like stocks do. And personally, I'm sticking with my boring index fund strategy for now because it's simple, it's working, and I don't want to overcomplicate my plan. If you found this helpful and you want to see more European personal finance content, hit the like button and subscribe. And if you're curious about how I invest in UCITS ETFs or how I built my portfolio from zero, check out my video on that topic. I'll link it in the description. That's it from me. See you in the next one.